Hi and welcome back to Trading Strategy Testing channel, where we backtest your trading strategies and share with you tips on how to become a successful trader. If this is your first time here, make sure to subscribe to the channel and hit the bell icon so you won't miss any of our new videos. We have received a request from William Lee, one of our YouTube subscribers who wanted us to make a video backtesting a fractal trading strategy. Fractals are one of the most useful structures in Forex. In today's video we will discuss a simple fractal trading strategy with and without Martingale system. Without any further ado, this is the summary of our video. We will start off by discussing the strategy that can be used in Forex and stocks market. We will then proceed to the backtesting process. Once done, we will share with you the results and whether we encourage you to use this strategy or not. Stick till the end of the video as we are backtesting the same setup with Martingale system to see whether multipliers could make you profitable or not. We are also sharing a little gift with you all. So, how to trade fractal patterns. Fractals are indicators on candlestick charts that identify reversal points in the market. The pattern itself includes 5 candles, and the pattern helps locate the zones where the price has struggled to go higher or lower. They are usually used to draw support or resistance levels. There are 2 types of fractal patterns we can notice on the trading chart: bearish and bullish structures. A bearish fractal point occurs when there is a pattern with the highest high in the middle and 2 lower highs on each side. We can see here a classic example of the bearish fractal pattern. On the other hand, a bullish turning point occurs when there is a pattern with the lowest low in the middle and 2 higher lows on each side. Actually, the 2 patterns can only be noticed after they are formed. So, we can't really enter the market at the top or bottom of the fractals. So what's the best way to trade fractals? The easiest method is to enter the market when the price breaks a support or resistance level which is made following the latest fractal patterns. First, we can draw a range using the most recent top and down fractals. We will go long when the price breaks the top of the range. We can use a buy stop order in this setup. On the other hand, we go short when the price breaks the support level that we draw using the latest down fractal patterns. We can use a pending order or simply schedule a price alarm at the support level, especially if we are planning to go short, only if the breakout candle closes below the support line. Alright, we will use an expert advisor to backtest our strategy today. Let's look at the settings of this EA first. As usual, we will use a $1,000 initial balance. We won't use the time filter this time. But the most important element here is the minimum number of fractal patterns that the EA will use to draw the support and resistance level. We will keep it as it is. The next flexible input is the maximum fractal difference. This value represents the maximum distance between the fractals that the expert advisor will use to draw the key levels. 20 is good enough. As usual, we will enter the market with 1 micro lot. We will keep the Martingale option disabled now and enable it later to see the difference. Great, let's begin backtesting. We will try the strategy on the Euro-USD Forex pair. The best time frame to run this expert advisor is 5 minutes. You can also try the higher time frames, but you will have a lesser number of possible entries. We can choose last year as our time range, and of course, the every ticks is the most accurate way to backtest trading strategies. Let's run the test and see how the strategy will perform without the Martingale option. But before I forget, let's return to the expert advisor settings to set the take profit and stop loss. Based on the request of our subscribers, we will go for 1 to 1.5 risk to reward ratio. Always verify the settings twice, as a small mistake will cost you a lot. Let's click on the start button now. If you have a trading strategy that you want us to backtest for you, you can submit it at www.tstlife.com/submit. Your submissions are our main source of ideas. When backtesting a strategy, take into consideration the broad market trends in the time frame your strategy was tested. For instance, if a strategy was only backtested from 1999 to 2000, it may not fare well in a bear market. It is often a good idea to backtest over a longer time frame including several different kinds of market conditions. But it's better to start with a small time frame first in order to have an idea. Once you optimize your strategy, you can backtest it on longer time frames as the process would technically take a lot of time. But remember not to invest your money into a strategy before using it in live market conditions with your demo account. We have just finished backtesting the strategy without Martingale settings. Let's look at the results. We can see that the drawdown is not that important as we didn't have many entries. Our equity didn't increase that much. Let's look at the full report section. We had a good drawdown of 1.46%, which is quite good. However, the success rate was not that promising, and we have made a profit of $10.35, which could be understood as we were entering the market with one micro lot. I am not impressed so far. Anyways, these are the results without the Martingale strategy. What would happen if we enable the multipliers? Let's continue watching to find out. Let's repeat the backtesting process with the Martingale multipliers enabled. Do you think the results will be different? Let us know in the comment section. We need to enable the option first from the expert advisor settings. For those who are not familiar with the Martingale system yet, I would define it as a type of strategy which is based on the idea that you will double your bet after losing trades. In theory, you will always cover your losses with winning bets that are double the amount of the losing ones. It's a risky strategy that many traders use to recover their losses. But if it's implemented properly, it could be a powerful add-on to your trading strategy. We received many questions about the manual backtesting process. It is definitely the best option for people without coding skills. The idea is to do actually the same as the automated code does, but with your own hands. It is more time-consuming, and the results might not be that accurate, especially if it's done by the person who developed it. If you are not familiar with coding expert advisors, you can find another Forex trader and backtest each other's strategies. Otherwise, you can spend some time learning how to code an expert advisor. I will leave a link to a useful Udemy course in the description box. We have just finished backtesting the strategy. Let's look at the results now. As expected, the drawdown value is way higher than the one we recorded in the first attempt. 11% is an okay drawdown value in my opinion. The other important figure is the success rate. It was 54.79%, which is quite good. The profit we made is $184, which represents an 18.4% yearly return on investment. The consecutive wins or loss figures are not that significant. Well, these are basically the right ingredients for a great Forex strategy. So should we use this strategy to trade Forex? So these are the final results after backtesting the Fractal's trading strategy with and without multipliers. We can see that trading fractals with Martingale system is more profitable. But I am afraid that we don't have enough data to make a final decision yet. Honestly, I still prefer trading this strategy without multipliers. Let us know if you are interested in a video where we optimize one of these strategies to make it more profitable. You can download this expert advisor from our website. Feel free to backtest it and share with us your feedback in the comments section, Telegram, or Facebook groups. See you soon and happy trading.